Michael Zuber, one rental at a time. It is Sunday, November 6th, and this is your financial news. These are the 5 things that I think are important to understand today. Let's get into them. Number 1, we need to talk about tech layoffs and potentially understand that we'll also have layoffs in finance. If you've been watching the channel for any length of time, you know I've been highlighting that I believe the risk is on white collar. Tech layoffs, finance, right? Mortgage, finance, all of that. I think what you're starting to see is just the beginning of that. We got word from Stripe. We got word from Lyft. We obviously see what's going on at Twitter. I believe there is more coming. What you are going to see is we may have an 18-month recession. It is going to be hard. I have said repeatedly that I believe the next year will be the hardest year of my hardest economic year of my life. Macro. It won't be fun. So I tell you, get ready, understand, fortify, stack cash, do what you can, get close to revenue. There will be companies that take a machete to their overhead. They will grow slower, but they will be profitable. Then there are companies that will not. They will wait. They will delay. And then they will be sold for parts. They will either go private via private equity, be taken over, or have a stronger competitor buy them for pennies. I say this as someone who went through this a couple of times. I was at a very, very strong software company in 2001. We were on the cusp. We were having a road show to go public. And then 9/11. Then the world changed. Sales dried up. Travel dried up. Next thing we know, we laid off 30% of the staff. Hardest thing I ever had to do. Lay off 30%. And then we couldn't stop it. We couldn't survive. We were sold to a larger software company for pennies. Pennies. So again, executives, CEOs, VPs, you have a hard job. You need to save the company. I believe there will be also more layoffs coming to finance. You simply don't need as many people to shovel dollars into the treasury and make 4% or whatever duration you are picking. So again, get close to revenue, make sure you're fortified, stack cash, get rid of variable rate expenses. You can get through this. You know, it will end, but I do think the next year or so is going to be rough. We're just starting to see this. And then Jack Dorsey. Jack Dorsey, obviously former CEO and founder of Twitter. He put out a series of tweets yesterday, I believe, taking responsibility for growing Twitter too fast. It was very good of him to try to take ownership of that, but I ask you, how many other software and tech companies grew too fast? Who here doesn't think that Google and Facebook grew too fast during the pandemic? Have you seen their hiring numbers quarter to quarter? What are all those people doing? There are others as well. So again, doesn't feel good to say these things, but I know what it feels like to be on a glide path to IPO and millions of dollars. Something happens, you have to cut 30% of your friends, and then you're sold for parts. Not good, not good. Midterms. Well, finally, we will get midterms over on Tuesday. My only hope is we have a split government. I believe that's what our founding fathers had always envisioned. I hope the Republicans take one, if not both, the House and the Senate. And then we have gridlock. We have 2 years of gridlock. Nothing happens. We get to 2024. We get past this recession, and we just try again. You just try again. So Tuesday is very important. I don't know that the stock market will interact either way. I think the stock market expects the Republicans to win one or the other. I think they expect the House. I guess the Senate's a little closer. As long as they win one, though, gridlock ensues. Nothing happens. We get through the next 2-year recession. And then we have the 2024 election, and hopefully we get put on a better path after that. 2 years. So I don't know if you guys follow the All In podcast. It is something that I listen to every week when it comes out. This week was really good. This week was really good. Chamath talks about expecting a 2-year, up to 2-year recession and having to make investment decisions. And Chamath admitted that he thought this would be over by next summer. He now says, hey, the Fed's going higher, the Fed's going slower, and the Fed is going longer. We have to adjust our time frame. So what does that mean for you and I? For the prepared, it means we have 2 years, maybe 3 years of shopping. Because what happens after you get out of a recession is you still have about a year of shopping to go, at least in real estate you do. So again, if we have another 18 months or 2 years of a recessionary environment, you and I can go shopping. And I am excited to do that. CPI comes out on Thursday. I have a question for you. Let's take a guess. CPI last month was 8.2. What do you think CPI will be? I actually haven't thought about this, so I will withhold my guess till tomorrow. But leave a comment below. What do you think CPI will be? Will you think it'll be above or below 8%? I again think Wall Street will want it in the 7s. They've been wanting it in the 7s for the last several months, but I just do not know. So that's CPI. Number 5, rates. What we have heard from the Fed, what the market and bond market is starting to understand, what housing is starting to understand. It's not what I wanted. Remember what I was asking for was take them up to 5% in an accelerated manner and just stop. Just stop. See what breaks. It now appears what the Fed will be doing is they will be going slower. But that does not mean December is less than 75. I don't know. I still think it's a toss-up. It's a 50-50 game. I think it will depend a lot on CPI this month and CPI next month because CPI will come out before the Fed meeting next month. We could get one more 75 or we could get the first drop to 50 next month. But yes, what we now have from the Fed is they're going higher. Jerome Powell has told us that 4.6 in their SEP is bogus. We're going higher. We will get another number in December. For the last several weeks, I have been pointing at 5% as the number. I now, unfortunately, think that's the low end. That's the low end. Could we go to 5.25 or 5.5? We have to sit back and watch. So those are the 5 things that you need to know today. Tech layoffs have just started. Jack Dorsey apologized. Midterm elections Tuesday. 2 years of potential shopping opportunities for a recession. CPI on Thursday. Let me know above or below 8%. You want to guess the number? Let's have some fun. And then rates are going higher, but slower and staying there longer. And then the last thing I want to tell you, just some bonus information. One rental at a time. This channel right here, right now, is going to hit 10 million views today. I don't know what to say. All I can say is thank you. I could never imagine when I started this over 3 years ago that we would get to 10 million views. It's a great feeling, I will admit. So thank you for all of your support. It's been a lot of fun. We will keep coming back at it. And just so you know, I am recording videos for Friday and Saturday. They will be out later today. Lots of you asked for it, so we'll see how that works. All right, everybody, take care. Bye-bye.